Hey, everybody. Good afternoon. This is Doc Severson and Dave Lukas of 12 Minute Trading. Today is Monday, the 3rd of April. Welcome to the second quarter, everybody. And welcome to what could be a very, very different market going forward from here. We're seeing just the last week, we've seen, about 150-point swing in just about 3 days. It's been awesome. So Dave, what do you think? Is this the gateway to the new bull market, or is this just going to be a bull trap to end all bull traps? What are you thinking these days?
I think it's a little early to tell. Remember, last week was Friday was the last day of the quarter, right? So you always have crazy things. It's an options expiration day. Not that every day isn't now, but it was a Friday expiration. It was the last day of the month. It was the end of the quarter. So I think we saw some window dressing into that. I think it would have continued today. The energy in the charts there, we'll get to that in a minute, is there to continue it. We're still watching this monthly chart because that's the key to the future in a large way. But one thing that I think people saw it, but I don't think they understand the significance of it, is what OPEC did over the weekend. And we see that helping some areas of the market, obviously. We see that hurting some areas of the market. So, for those of you maybe saw that OPEC made an announcement, OPEC Plus made an announcement to cut barrel production over the weekend, led by the Saudis. And overall, about 1.6 million barrels a day of production is going to get cut, right? And so what did oil do this morning? It jumped up 6-7%, right, to start the day, over $80 a barrel and everything. And, you have to ask, why did that happen? Like, what, we went through the last couple months, we had oil that was down below $70 a barrel. Like, why all of a sudden, when, OPEC could have done this 2 months ago, why is this all of a sudden happening now? And what are the ramifications of it? Not just in the short term, but for the future. And one of those things is that, if you remember, and if you've paid attention, we've been draining our strategic oil reserves. So, it's no secret. A lot of it's political, trying to keep the oil price down. We had a big drain right before the election last year, right? But we're at about 50% of where we were. We're actually at like 1983 levels on those reserves. And one of the things that the White House had said is that when oil got to about $70 a barrel, it would start filling up the reserve again. So it effectively put a floor of about $70 a barrel, right? Well, and I think everybody played along, right? The rest of the world, OPEC, it was like, okay, fine. That puts a floor on oil. Well, a couple of weeks ago, the White House said, we're not going to do that. And I think it really ticked the Saudis and these guys off to a point where they said, screw it. You're not going to play ball. You're not going to do what you said. We're cutting production, and now you've got oil on the way back up. In fact, I think it was either JP Morgan or one of the big banks is now a $100 price target for oil at the end of the year. And so what's that going to do for inflation, right? Oil is the underpinning of everything, right? Regardless of your beliefs about oil, right? There's different opinions and all this stuff about the environment and all that. I'm not going to get into that, but at this point in time, oil is the underpinning of the lifeblood of everything that moves. It is the energy that powers your home, your car, every, industry, all of that. But almost half of every barrel is used to make hundreds of other products. Your laptop is made from oil. Antibiotics are made from oil. Everything has elements of oil. Your clothing, all that stuff in it. And so that's going to send inflation back up. And so where the Fed was doing their job, trying to get it down, raising rates, now the Saudis just kicked them in the teeth and basically said, screw your initiatives, and we're sending the price back up, and that's going to raise the prices on things. So I think you've got an issue where we don't know what the ramifications will be yet. It'll take some time for that to take hold because they said they're going to do that through the rest of the year. Then we end up with we saw this in the 70s into the 80s where they thought they had inflation beat, and then all of a sudden it was coming down, and then it shot back up again. And this is a perfect thing that could be a precursor to that happening again now. And so for the meantime, the short-term markets are fickle, right? They think very short-term ahead. They trade on the news of the day and that sort of thing. So today it affects things. A few days from now, maybe it's not as big of a deal. But several months down the road, it's going to start to be a big deal again because you just increase the price of everything by a good amount. And so this is a pretty big deal. It also has ramifications on the dollar. as a reserve currency, because now these countries, the BRICS and Saudis are joining them, are starting to trade outside of the dollar currency. The petrodollar is changing. So from a macro standpoint, some big things. This is a big move.
Yeah, it's. I'm going to bring up the charts here just to anchor off of something that you've talked about. So not only do we have all that backdrop happening here, but we also have things are wound up like nobody's business right now. We have this monthly chart of the S&P where we've stayed within a relatively tight range. So most of this activity over the last year now has stayed within a relatively tight 400-point range. So even though we've been living within this bear market and all of this corrective behavior, it's actually been in a relatively tight range. At the same time, what I've noticed is the ATR, which is the average true range. If we go look at that for a second, did you know that we are running at the same level of volatility right now as the great financial crisis? So we're about 58, 60 points right now. Now, if you go back to the GFC, if we go way back in time here to, when things really fell apart.
The Wayback Machine.
Yeah, the Wayback Machine. We're almost there. There we go. Do you realize during the GFC, we only had about the same level of intraday volatility as now? So there we are all these years later, and we still have the same level of volatility. So that is normalized. We're just seeing these huge moves. And we could talk about how this is happening. Maybe it's through zero TTE. It's, various other things. It seems like the VIX is taking on less of an importance in terms of actually hedging things. But we do have a wildly wound up market right now, whether we look at the monthly chart, whether we look at the weekly chart, or even the daily chart. The daily chart now has hit exhaustion. So last week it was all wound up, fully charged. We're banging on the table. Hey, look out for a big move.
That's your 150-point move.
Yeah, there it goes. So here's my thought on this. Right now, it's hard to say whether or not this is just going to be, is this, going to just be a lower high, roll over, and just pull everybody in, like, just suffocate them as a bull trap, because right now this is still a lower high? Or is this the beginning of something where we see the markets just absolutely rip? Now, last week we saw an absolutely different change in character, but that was all before the backdrop that you just laid out. Mm-hmm. So what I'm looking for in the short term is if we end up trading within a very small range, and I would say very small range is about a 50-point range over the next, I'd say, week or so. And I don't know how much of this is going to take into the jobs report, which is released on Friday, of course, on a holiday. It's been years since they've done that. Go figure. It's like you have one job, right? You had one job. Did you have to pick Easter Friday to release the jobs report? Right. So if it stays within this tight little range, that is a very bullish sign. And I would expect that to continue to break higher and climb the wall of worry above 4,200. On the other hand, if we start to see the price doing this kind of thing, if we see it going right back into this kind of crap, then more than likely we may hit a lower high. And, who knows? We're going to be heading down to somewhere down here, 3,500ville, before we finally get a rebound from this, which would actually solve a problem in the meantime, because that gets us up. That gets us our capitulation finally. So we've never really truly had capitulation on this bear.
Doc, the thing that we've seen, and it's very glaring on the daily chart, is this move to the upside is not we love those grinding higher type markets, right? Really easy to sell against. Yeah, the volatility is lower, but you don't have, and you can kind of see it. Look at the last however many days there. Yeah, we get it's 100 points down, then 140 up. And that's still going higher, right? And I remember this, you think about not last week, even the week before, it seemed like we were having these big sell-offs, but we ended up higher for the week. In fact, the last few weeks, we ended up higher. It didn't feel that way, but we're ending up higher. So we're kind of in this weird crazy environment where it's big moves to get there, but it's still a grind in the end. It's kind of a weird
when the price when the
trend.
price action doesn't make sense on the daily chart, what happens is you have to move up in time frame to somewhere, and then you can see who's in control. Right now, the weekly chart is in control because it absolutely makes sense if you look at the weekly chart in terms of what's happening here, because we're still making higher lows and so far higher highs. I'm going to put a question mark in there because obviously we've got to break above 4,200. So it's got to tack on another 85 points in the next week or two. I mean, if it can't do that in the next week or two, it's probably going to print a lower high and we're going to set up the trap. Or it's just going to move into the next consolidation. We don't know.
You can see the weekly chart. Obviously the energy's going down with the release that we had. Look at the last three now into the fourth week.
Yes.
Right. So you can see that the last 4 weeks, but look at that V. Like we went down 200 points to go up in the end, maybe 25 points. Like that's the world that we're in right now. See that? And so right now that it looks like it is releasing and running higher. We know that like if there's another bank that fails next week, that can change this whole thing. But as of now, that's where we're going. The bigger thing that I'm watching is that monthly chart on the far left there. You've got this coiled up monthly chart that is charged to the highest it's been in 5 years. And this thing is ready to start breaking. And these trends go for 10, 12 months. This isn't like, a week thing. This is setting the trend for the next year when this releases. And we've shifted into April and it finally started to tick down. Now, we've had times where it ticks down and then goes back up again, right? And continues walking. You can actually see that right there. We had that level tick down, but then we, kind of went back up and went higher again to the high before we started ticking down now. So we are, though, close within a month, maybe this month, not next month, to that releasing. And that's going to be the trend. That is going, whatever way that really does go. And I usually call a monthly chart when it gets to about 50 on the energy. And that trend is set in and it's at about 50 is where I say, okay, this is the trend.
Yeah.
Now setting in. So like, look at that coil though. I mean, this thing is ready to just explode in one way or the other. And I would say right now it does favor upside. And the only reason I say that is because everything is negative. Everybody expects
everybody is. We've had some records, well, not records, but we've had some extremely high put call ratios. Also, what we're seeing in this market is we're seeing the same structure of bottoms are an event and tops are a process. So we're seeing the same kind of thing here where when we get up to a market top, it's being very, very volatile. It's very difficult to get through. And when we see bottoms here, they tend to be very spiky, almost event-like things. And that's what we saw the early part of last week. We saw, once again, we tested the 200-day moving average. Actually, there's a bunch of VWAPs down there as well, too, providing support. So we did test our dynamic support for the week last week. Boom, heads higher. But now we got this obstacle up here. So that's really, that's the crux of the biscuit these days.
Well, there's one other piece to this puzzle. It's the dollar. So with everything that's happening with what OPEC just did and some of the other moves that are happening, if the dollar starts to weaken and lose value, that's good for stocks, especially multinationals. So S&P, Dow, those ones, even tech, do pretty well. The Russell, not so much because they're more centered on the U.S. and stuff. But the dollar, if it starts to go down, right, and starts to lose some value, which typically you'd start to see as these things do happen, then that, can help buoy this and keep it going. In fact, some of that is what's made this go, because the Fed pumped $400 billion, and turned around QE or QT back to QE again on their balance sheet with what happened with the banks a few weeks ago. That's part of what's fueled this daily rally.
Well,
right?
Notice what happened all the way through 22 up to October. And then since October of 22, we've seen, an opposite move in equities. We're almost at the same point. This is actually, this could break higher, this could break lower, and equities will be driven by the dollar.
And so I would tell everybody, just be prepared. There's a big, long-term trend coming. And we really don't know because, there's big events that can affect this stuff, right? And so we really don't know which way it's going to release yet on that monthly chart, but we do know we're getting close to that release. And it may have started this month, but if not, probably within a month or so. And there's a lot coming, right? So one of the things Doc and I were talking about before today, coming on this, was we're kind of at that point where if this rally is going to hold, it's going to continue. It'll continue through into April and probably into some of May. And there's the old adage, right? Sell in May and go away. In a lot of years, that holds true. This year, we have an extra added wrinkle in that, and that the debt ceiling whole fiasco is going to start in May. And the beginning of June is when they have to make that decision on the debt ceiling or not, right? And most likely they're going to raise the debt ceiling, but as it always happens, they're going to go down to midnight on the last day. And we are in this zero DTE option environment where literally a senator comes out and says something today, the markets move in a huge way. And another one comes out tomorrow in a different way and stuff. So I think if the market wants to run, we've got a good, clear kind of runway into the beginning of May or so. And then after that's when it's going to get sketchy again. And that may coincide with blowing out the weekly chart energy, right? Based on how things are going. So that's kind of where we're at. So we are going to go through some more turmoil as we get into May, into June, because both those sides are going to jockey for position with what they want. And it's just the nature of politics to take it all the way down to the wire to see who blinks first. And that's what's going to happen. So that's going to cause some turmoil in the markets in the back half of May into June.
Yeah. May you live in interesting times. So this is why we're having to recalibrate. This is every few months we've got a different market that we have to recalibrate to. So this is why we're going through that process right now, constantly trying to match what the market wants.
Oh yeah, and we'll see even how today ends, right? Let's see, we've had some selling off. We'll see if it gets bought back. There's where do things really stand right now? That uptrend's still intact, right? And it makes sense. We had that blow off Thursday, Friday of last week, pulling back a little bit today, kind of sideways action, taking a pause. We've got a holiday week coming up. A lot of people probably after tomorrow or so, a lot of traders are going to be out anyways. And then you get into some of that low volume. So it's probably going to just, be a blah week, right? And then next week we see it kind of kick back up again, especially after we get the jobs numbers.
Yep. So absolutely. You'll see the futures actually. I think you'll see the futures trade for about an hour after the jobs report on Friday in the Globex, in the Globex section. So we've actually got a comment here from Sergey. Aprils are typically bullish months for the market. Maybe we get a quick pullback to trap the bears and then rip. Sure, I'd be okay with that.
Possible.
So
I mean, that's what the daily chart's signaling right now, being out of energy above the upper Bollinger Band. It should pull back. It doesn't have to pull back a ton. Like Doc said, 50 points. It would be enough to do that and walk sideways a little bit and then head back. So if it's high and tight like that would be total sense to see that. So, Okay. In fact, anybody else have any other questions or anything, please go ahead, type them in. We're happy to answer them.
Yeah, we always love to interact. We like to make these things live, even though we're usually prepared to jaw away for a few minutes. It's better if we have some interaction. So, but anyway, if for those of you that don't know us, or if you just know us through the YouTube channel, we do this once a week, where Dave and I get on here and opine about what we see happening in the markets. Otherwise, Dave and I are talking to folks just about every day in a live trading room. So, there's no secrets around here, and we this is our life. This is what we do. So,
well, let's chat a little bit about what we see. We were talking about this earlier too. What we see kind of working out there right now, right? Because we're going from different types of markets. It seems almost every 2 weeks there's a new different type of market to trade. For me, the staple that's worked well has been my my double trades, which are my kind of just monthly income trades that I do. Been able to set those, at the levels that can withstand these like 100 points one day, 120 the next type stuff. It's tougher on the shorter term. In fact, if you've got the fortitude, the shorter term trades like we do, like you do, can work, and they do work. In fact, I trade them, but you've got to have the stomach to stay in with these moves. It's just insane. So, I'm kind of smoothing things out by doing, the monthly, where I'm just bracketing like, the S&P, 400 or 500 points on a side, and just letting time work on that for me. And every once in a while, one out of every 10 to 15 trades, I got to make some adjustments on, but it's definitely not, it's not hair raising. It's not, kind of in that moment stuff where you get attacked and it's just a rough thing to go through. So I'm really liking that. And so I'm trading a little bit less on the short term, 3 to 5 day trades, but I'm still seeing them work. I just have to have more fortitude with them. Your thoughts?
Oh, absolutely. So what I was talking to our folks about this morning is like the way to handle this volatility is either you slim down and you look at 1 day at a time and just trade within that 1 day, which is 0 DTE, or you can go way out, to something, where you're talking about at least a couple of months, giving yourself lots and lots of time to adjust and move with the market. More often than not, we're getting maybe 5-day moves, and then it's reversing and going back in the opposite direction. So we haven't had a linear trend that's, gone on for hundreds of points in quite some time. And this is why we're waiting for that big monthly move to go. So we're looking at, also, we're playing these like low probability iron condor where we have a 1-to-1 reward to risk on these. And it's like, this allows me to sleep at night because no matter what happens, I know exactly what I'm risking on these trades. And also the fact that we are playing a little closer to the money means that things happen a lot faster. So we get a lot faster time decay because we're picking up so much more extrinsic value on these trades. So these are currently some of my favorite to deal with today's volatility.
Well, and you risk less with those, which it makes them better for smaller accounts too, because you don't have as much risk.
Yeah.
Sergey asked about natural gas. I haven't paid too much attention to natural gas, other than the fact that chart seems to be the never-ending chart going lower, from what people are saying. It's one of those things where it depends on what you look at, right? Because there's all these different tickers for natural gas. There's ETFs and all that type of stuff. But at some point, the natural gas will tick back up. The reason it's down is because we had a very mild winter, especially here in the United States. I think I'm in Ohio, and we think we had snow on the ground twice, maybe 3 times. And 2 of those were a dusting, right? So it just wasn't a huge year for, using a ton of gas like that. So that's one of the big things. But most things revert to the mean, right? So if you're opportunistic and you've got a longer time horizon, picking up natural gas at these lows like it's at, and waiting into the end of this year into next year, you're probably going to get a benefit from that. If be fearful when others are greedy, and greedy when others are fearful. So when something's on the floor, it's a good time to pick some up. I always love oil when it's like that. In fact, one of the best times ever for oil was during the pandemic. It went negative. I remember when oil went negative, I snatched up as much as I could of the ETFs, of the negative oil day. And then, within weeks after that, it was skyrocketing back up, right? And, those were great trades. I love that. So, anytime you see something like that, it's not bad to add a little bit of position on it.
Super. Okay. Well, let's see. I don't see anything else coming in. So we love taking questions as well. If you know that we're going to be on next Monday, if you can't join us, so if you're watching this on a replay, for example, then just go ahead and email us and we'll pose your question when we do this live. We'd be happy to do that. So, all right, Dave, you got anything else? Anything else for
No, that's it. I think we need to let this week, holiday week, kind of get out of the way and then see how we, kick things back in next week and keep watching that monthly chart.
All right. Well, fantastic. So for Dave, Lukas, and myself, we are 12-minute trading. And thanks for joining us here today on the 3rd day of April in 2023. Hang on, folks. It's going to get more interesting as the month goes through. Thanks, everybody, for joining us, whether or not you're live or whether you're on a replay. And we'll see you next Monday. Thanks. Cool. We got